Hi, and welcome to the Money Matters, the week ending April 25th, 2025. We are almost a third of the way done with the year. Where does the time go? Let's get into the markets. It's not as bad as you think, okay? You've seen me share these before. This is a recent volatility update on the student of the market by BlackRock, which is arguably the biggest money manager in the world. They know a thing or two about the markets. Um, I just want to, again, start this with when in doubt, zoom out. There's a ton of noise right now. There's a lot going on. Let's zoom out a little bit. We have never seen this type of volatility before. Absolutely incorrect. We've seen this a bunch of times before. When they did this a few weeks ago, we've had 4 days year to date where we were up or down 2% or more. In 2022, we had 46 days of that. In 2021, we had 44 days. Back in 09, we had 55 days. Back in 08, we had 72 days. We've seen this level of volatility many, many times before. We just haven't seen it in a few years. So a lot of times people forget this is a normal type of volatility. But the market's going down a lot. Well, yes and no. It may surprise you to know that around a lot of those really down days, there are really up days. And this needs to be updated for this year. But just to show you 2020 as an example, they had three of the worst days since 1950. A 12% loss, a 9.5% loss, 7.5% loss. By the way, 2020 was still a positive year for the market. But look at some of the best days, number three and number four, right in between these two terrible days. So the best and the worst days are often right next to each other. Very, very common. We had a couple weeks ago, I think 2 days that were about 5% drops and then a 10% jump in one day. So what does that mean? The person that tries to get off in the middle of the roller coaster is the one who gets hurt. Okay. Here's if you were invested the last 20 years through all the volatility, you had a 7x return. If you miss just the 10 best days trying to trade around it or not being in the market because you didn't think it was right, or you're going to get in at the bottom, which nobody knows, you lost half your return. If you missed less than a month of the best days, you really, really hindered your return. It's not timing the market. It's time in the market. Okay. Well, I'm going to just wait. I'm going to sit in cash and I'll decide to get in when everybody's feeling better about it. And when I feel things look better, when you tell me it's time to get in. Well, I don't know. CNBC doesn't know. Jim Cramer doesn't know. But I can tell you this, the average return in the next 12 months following a 10% decline, which we hit last month, is 16%. Let me say that again. The average return for the next 12 months following a 10% decline is a 16% return. Not a guarantee, but I'd take that. How about if it's worse than 10%? It's a 24%. When things go down, it's scary, but they're on sale. It's actually safer, much, much safer to buy when things are down than when everything's going and you're overpaying for the same thing. It's funny, the market's the one thing nobody wants to buy on sale. Here's a lot more data on the corrections in the past and the returns the next 12 months, almost everything but '07. But then look at the next 12 months. Very, very, very high returns. Okay. And then again, here's the big zoom out slide. Okay. This is going back to '08. This is all the stuff we've gone through just since '08, right? The Great Recession, the debt crisis, the downgrades, COVID, all these things, the Silicon Bank stuff, and look at the market. Okay. So when we zoom out, I would make the argument that everybody that is invested in the market, no matter what your age is, you should have at least a few years time horizon. And keep in mind also, a lot of you aren't all in equities. Many of you are in a 60-40 portfolio, which has about half the volatility. We've got a lot of clients that aren't even down year to date with alternatives and bonds, they're up. So I just, again, remember why you're investing to begin with. And it's not all doom and gloom out there. This, speaking of doom and gloom, is probably one of my favorite slides. So this is basically the highest bearish sentiments, which we're pretty close right now at that 60% range. We actually got a little more positive. And then what's the market done 3 months after? Still a little scary. Okay, good or bad? Not terrible though. How about a year after that? I mean, look at all about this 2022 period. Very, very significant gains. So the top 10 bearish periods, the next 3 months, you made money, and look at the next year. Really, really good. Not a guarantee, not saying we're out of the woods, not saying it's changing tomorrow, but just remember these things ebb and flow. They ebb and flow, and you do yourself a lot more harm by trying to time and get in and out than just stay in the course. So, with that being said, if you have concerns, please reach out. I'm going to heavily encourage you. If you have some extra money sitting on the sides, give us a call and let's put it to work for you. I can't tell you it's the perfect time, but I can tell you it's 10% cheaper than it was a few months ago. So that's where most people make their money. It's buying on the discount. As always, thanks for watching. We're here for you, your family, and friends. Have a great day.